Ladies and gentlemen, good day and welcome to the Q2FY22 Earnings Conference call of Bata India, hosted by Axis Capital Limited. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anand Shah from Axis Capital. Thank you, and over to you, sir.
Yeah, thanks, Steve. Good morning, everyone. And on behalf of Axis Capital, I welcome you all to the Bata India Q2FY22 earnings call. It's a great pleasure to host this call, and we have with us the senior management of Bata India, represented by Mr. Gunjan Shah, Managing Director and CEO, Ms. Vidya Srinivasan, Director of Finance and CFO. So what I'll do is I'll hand over to Gunjan for the presentation and opening remarks, and post that we can jump into Q&A. So thanks, and over to you to Gunjan for the presentation.
Hi. Good morning, everyone. Good to see a lot of you, or at least good to have all of you on the call. Hopefully we'll get to see you soon also. So I'll jump directly into the presentation. This has already been uploaded, so I'm assuming you have access. I will try and navigate through a title of the slide as well as number of the slide so that it can help us stay synchronized. So I am on slide number 3. The disclaimer is slide number 2. Right? I'm assuming you'll have read through the disclaimer. So what you will see in this presentation is basically some kind of an overview of what this organization Bata is all about, right? What is our key thrust levers and strategic initiatives going forward? What were the highlights in the quarter that went by against those thrust levers? And finally, we'll end with Vidya taking us through the financial summary. Moving forward to slide 5, which is the overview. Bata India's most loved and trusted footwear brand, 1,500 plus exclusive stores in almost close to 1,000 towns and expanding, and we'll talk about that. We operate across almost all segments of footwear, right? And as you can see, the entire pyramid, whether it's right from premium to mass, we've got multiple brands as well as obviously Bata brand itself that straddles many of these. And that's what keeps us basically reasonably risk-weighted as far as making sure that we've got an even balance of revenues all across. Moving further to slide 6, which is the business strategy, the strategic thrust levers on slide 7. What you see are 6 bubbles with obviously a couple of them right in the center. So since I am talking to you all for the first time, I'll try and speak a little more. And then subsequently, as you know, we interact over the quarters and the years, we will hopefully not have to spend so much time. So the first one right at the top is making sure that the portfolio of the company stays relevant to what the consumer's inherent, current as well as future demand is. Right? So we'll see what we have done on that front. But that's something that's evoluting. It's a pretty dynamic environment, has gone through some change. Both in the last couple of years, as well as there are some strategic changes that are visible to us, and how are we moving in line with that. The second one is to ensure that the footprint expansion happens largely through both the MBO route, which is the distribution, as well as through the franchise store route in largely town pop strata and tier 3, tier 5 towns. Number 3 is to making sure that we bring back marketing investments. This is something that had taken a toll in the last 18 months, and rightly so. But we need to make sure that we bring that back, and a slightly more longer-term agenda, which is to making sure that brand Bata remains youthful and aspirational as we go forward. The fourth one is making sure that our digital footprint explodes. And that is in line with obviously what we all know, the consumer propensity towards digital. And this is while obviously primarily anchored towards commerce over digital, but also in terms of our communication mediums, etc. Number 5, making sure that we've got a supply chain end-to-end, which is agile and efficient. And as time goes by, we'll talk about various initiatives on this front. Making sure that we've got a cost structure and a business model that evolves and stays nimble in a very dynamic environment, which is very visible to us in these times. And obviously, this is all anchored around two large, valued systems that we drive. One is that all of this is not possible without making sure that we put the right talent, processes, as well as technology platforms in place. And we need to make sure that whatever we do, we've got sustainability in mind, not only as a business, but also as an ecosystem towards our stakeholders. So with that, I will try and move further into various highlights in the quarter gone by and the progress on various of these thrust levers. So slide number 9 is what I am on. You will see 4 blocks there. I think the one big piece we see from a portfolio point of view is casualization. I have spoken about this earlier also, and that is something that is not, while it has got accentuated in the last couple of years with the lockdown and the behavior thereof, but it has been something that is, as a trend, been creeping over the years. And we are making a very large conscious effort towards it. There are multiple initiatives that are running on that. One is basically something called Sneaker Studio. We have just piloted that in a few stores. We plan to expand the pilot in this quarter, and hopefully next year we'll see a large expansion of this. This is basically around the concept of having almost, we've got almost 9 brands. We want to showcase almost 300 styles of sneakers, depending on the size of the store, right, to consumers, and which is feeding into this casualization concept. The preliminary outputs of this concept are pretty promising, and hopefully you will get to hear a lot more about this as time goes by. The second piece is on our primary leading sneaker brands, which is Power and North Star, making sure that they get re-energized, first and foremost with increasing range as well as options to consumers, powered by technology, and that is something that is underway right now. North Star has already seen some encouraging results where we managed to achieve the shift in this quarter one by, and Power is also underway. So I think that's something that is going to be driven strongly. Both of these are feeding into the phenomenon where, newness in our collection had actually declined over the last 18 months, and rightly so, because it was a very, unpredictable environment. But now with things opening up, we are looking at significantly new lines, and therefore newness and new collection coming back into what we offer consumers across our stores. And lastly, on the same front as casualization, is a pretty large new product launch that we have done, which is called Floats, and that's washable, comfortable footwear, and that is something that has given us exceedingly good response. In fact, we have run out of stocks right now, and the work is on right now. Hopefully by end of December, we should have revised supplies back in, and that is something that will take a lot of our focus and energy in the coming year. Moving further to slide number 10. Expanding footprint, I think on multi-brand outlets, we made good progress. There has been good groundwork that's happened even in this COVID period. We have expanded from almost 700 towns to close to 1,000 towns in the quarter gone by, and this is something that we will see aggressive action going forward. I believe that the brand equity of Bata straddles across almost all consumer segments across pop strata, and I think there is a lot of scope for us to improve out here. Similarly, in line with that, we are also working hard in terms of what you see as an industrial business. It has been a niche business, but I think we do carry some significant right to win here, and that is something that we are working upon. There have been some good wins, and hopefully good business to follow in the coming quarters. Moving further to slide 11, franchise, which is the other lever in which we want to expand footprint. What we've seen in the quarter is that immediately after the lockdown opened, we started pushing the lever in terms of opening franchise stores all over again. And as you see in the snake curve, right, it just shows the number of franchise stores after the dip that we saw in June 20, which is where the first lockdown happened last year. Right, we've seen a continuous rise, and I think the curve is getting steeper now. We closed the quarter at about 250 stores, and as I've commented in my press release, we have already crossed 270 at the time of the release. We are through this covering almost 150 towns, And as has been stated, the vision is to make sure that 30% of our store portfolio becomes franchise-driven in the next 2-3 years. Moving further to slide 12 is the digital business, right? The way we see it is that you see two charts. One is talking about contribution to our business, and the second chart is talking about quarter-on-quarter growth. Effectively, it is trying to say that from the exit quarter of 1920 indexed at 100, you can read this as percentages indexed to it. So the quarter gone by was at almost 3.7x of quarter 4 1920. Is that right? That's the way to read it. Yeah. So sorry. Yeah. And the contribution in the first chart, as you see, has moved up from almost 5% in 1920 to 14% in H1 21-22, which is this year. And this is despite the fact that even in the quarter one went by in this H1 maintained at 14%, that shows that despite offline revenue started going up and the denominator going up, we saw the contribution being maintained. So that's good, healthy signs on that front. Slide 13, which brings me to the last slide on other key highlights on various thrust levers. As I said, we want to bring back marketing muscle back into Bata. And we've had a very large campaign that we started off towards the end of the quarter actually, and it panned out in October and will be subsequently reinforced with some others. But this campaign was the step ahead campaign, encouraging consumers to move ahead now from the COVID, the year that went by, and highlighting obviously our, the casual as well as the fashion range. It has given us very good response, and we look forward to many more marketing campaigns going forward. We also were, in this quarter, recognized by Reader's Digest as the most trusted brand in the footwear category. We also saw, excuse me, someone's got a charge, right? Okay, we also saw that basically occupancy or rent savings, while they are showing some sluggishness now with the economy recovering and the markets opening up, but however, the targets that we had set out for sales at the start of this year, we managed to deliver by the middle of last quarter itself. So we are looking forward to hopefully a better output by the time the year goes by. But the trend is tapering a little. On people, we managed to do two large initiatives. One was basically making sure that we assiduously tracked our population and their families for COVID. I think that's not only in terms of making sure we assist our employees and their families during this tough time, but also as soon as vaccination was opened up, we did 100% by July end. We are already sitting as on date actually close to 90% of the second dose done, and I think this is something that we are very proud of, and that is hopefully will stay us in good stead. We also saw, this being rewarded by consumers by the confidence that they had in terms of entering our stores, because we did propagate stores and man them with people who were fully vaccinated. Another initiative that we did, which is internal to our organization, was recognizing the front line. So the entire 1,000+ manpower, managerial manpower, fanned out in the front line across stores, factories, as well as warehouses, to make sure that these are the people who kept the engines of the company running while tough times of the lockdown were on. With that, I will then move to the financial summary. I will request Vidya to take over and take us through the numbers.
Right. Yeah. So for the quarter ended September 21, our revenues increased to 614 crores versus 368 crores in Q2 2020, an increase of 67%. And versus the 722 crores of Q2 2019. Q1 was obviously impacted by the second wave of COVID, and versus that, we've had significant growth in this quarter as the business has come back, to the earlier levels. From an EBITDA perspective, we are back to profitability versus Q1, and what we've also reported our best numbers in the sixth quarter. So essentially, we are improving in terms of trajectory, both in terms of EBITDA as well as PAT levels. Yeah. I think we can, and obviously the details have already been shared with you.
And the cash balance has gone up.
Yeah, and the cash balance has gone up, yeah.
Right. So that brings us to the end of our presentation, right? With that, I will hand it back to Anand to take us through the Q&A. Happy to take your questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Swagato Ghosh from Franklin Templeton. Please go ahead.
Yeah, thank you for taking my question and thanks for doing this call. Hopefully we can have it more frequently. I have two strategic level questions for you, Gunjan sir. One is on the volume growth. For the last decade has almost been like a lost decade for us. We have not seen much volume growth. So did you identify the key reasons for that? If so, if you can help us understand. And also for the next decade, what kind of volume growth are we looking at? That is my first question. I'll come to the second after we have discussed the first one.
Okay. Thanks. So one is, I want to assure you we will have obviously quarterly analyst calls, right? So that's on the implicit first question. The second one, I understand the point that you're making, right? I believe it's to do also with a lot of volume growth that is happening on two fronts. One is that it's happening from upgradation, unorganized to organized in the industry, and that is something that we would like to participate in. The second piece is also actually akin or a link to that has been that obviously the hinterlands have done much better as an industry over a long period of time. And that's to do with obviously better per capita income, disposable income, etc. And both of these are linked in a way to the initiative that I talked about, which is the footprint expansion. And just to reinforce it, even in this recovery, etc., that we are seeing right now, in the quarter gone by, our volume recovery has been faster than our value recovery. Right. While it is not at a compromise to ASP on a apple to apple or a revenue to revenue stream perspective, but however volumes have grown faster, and that's largely because some of our footprint related initiatives have fired in much better. So we will be conscious of this point going forward. Thank you.
Yeah, that's very helpful. Thank you, sir. And my second question is. You mentioned about casualization of our portfolio. Can you help us with numbers, as in what was casual as percentage of total volumes for, say, the COVID period, and what was it pre-COVID? And what do you expect that number to be? Where do you expect that number to settle, casual as percentage of total portfolio? And a related question is the selling capability in terms of the channel sales capability and also probably the designing capability, I believe is very different for casual versus formal. So how are we positioned to be a successful casual player? How we have been like a market leader in formals? Right.
So there are multiple points that you're raising, but however, the way I would like to say it is that casual was contributing to roughly around, I would say in the mid-30s pre-COVID, right? That has already gone up, right, into the mid-40s for us, right? So casual has significantly gone up, right? While we see obviously bounce back happening in formals and fashion, where we, as you have rightly mentioned, we do carry a much better franchise and a much stronger franchise. But casual is something that is very important for us going forward. So you will see this ratio going up. There are several initiatives on this, right? Casual spans a far wider portfolio. So within that, as I said, sneakers is one large piece, right? It's also a very high, how do you say, realization piece. But there is also in casual, as I said, the clothes range. Right, that also plays a very large role. So, open footwear and stuff like that. So making sure that we've got the right play in this at the right pricing is going to be critical. So a lot of capability both in terms of back end as well as front end is being built on this, and hopefully we'll share your progress on this as time goes by.
Great. Thanks, Gunjan sir. I'll come back in the queue for more questions. Thank you.
Okay. Thank you.
Thank you. Before we take the next question, a reminder to the participants, please limit your questions to 2 per participant. For any follow-up, may be requested to rejoin the queue. The next question is from the line of Arnab Mitra from Credit Suisse. Please go ahead.
Yeah, hi, Gunjan and team. Thanks for the very good presentation today. My first question was on digital. You've seen a big jump, but are you still under indexed to the industry in terms of how much now is coming for the footwear industry from digital? And if you could just highlight some of the initiatives that you have already taken and what more could you do to kind of increase your share in that segment?
Right. No, so I would agree with you. We are under indexed on digital. Right. I think the leadership that we carry on offline, driven by the large franchise and the footprint that we have of 1,500 plus stores, I think while digital has made commendable progress, right, not only in terms of absolute growth, but also in terms of contribution, I believe I would say that we are still under indexed. Right. Syndicator numbers are not available, but whatever intelligence that we have, I think there is still some scope to grow in terms of making sure that we get the rightful share there. There are 2-3 large initiatives that are happening, right? One is to make sure that we are engaged in the right manner with various marketplace platforms, right? In terms of making sure our merchandise is right, special range that we need to create for large platforms, etc., has been created, and the kind of engagement that is required in terms of supply chain and fulfillment that I think there is scope for improvement on that front. So that's one large initiative. The second piece is to do with our own e-store, right, Bata.in. We have made some good progress. We have refreshed the entire CRM platform with refreshed technology, etc. That actually happened in the quarter went by, and that has shown us some very good response in terms of both declining bounce rates of consumers as well as much higher repeat rates of consumers coming back and therefore loyalty going up. So and now we have also got almost something like 5,000 plus styles in Bata.in, which were hitherto slightly more limited. So I think the best range of Bata is available on Bata.in at any point in time. So that's the second large thing, and there's some levers to go in terms of getting more footfalls into that e-store. The third piece that is, I think, something that we have pioneered and I think has done well and will carry a momentum going forward is what we call as omni-channel, and which is basically trying to allow for consumers to get home delivery from our stores. See, all said and done, is the largest of our stores, even the stores that are 10,000 square feet and plus, right, which are few. But the point is that even there is a limitation to how many styles can we show. And consumers do want options, and therefore there were consumers who were left disappointed either because a style was not available or a size for a style was not available. Now what we have managed to do is, based on QR codes, we have managed to offer to consumers literally an endless aisle. So the entire 7,000 or 5,000 plus styles that I talked about, which is becoming 7,000, right, is basically now available to consumers even in the offline world. So while the consumer can try on products, but if a size is not available, etc., can basically just simply order, pay, and make sure that the product is delivered if at his or her convenience, either in store or at home. So all of these combined, I think these are the 3 large pivots, but they spawn off into many such initiatives, including many technology-related stuff, which is basically hopefully going to give us the rightful share that I talked about at the start.
Thanks, Gunjan. That's very helpful. And my second question was, many years back, I think there was talk of, a lot of focus on women's footwear and accessories. So I just wanted to understand where they fall in the priority list. Or is the casualization trend the main thing that you are going to drive in terms of portfolio? And that was my last question.
Okay. So see, there are areas where we are traditionally being strong at, right? Whether it's formals, whether it's fashion, right? Or whether it's even school. And these areas will get reinforced and ring-fenced so that we leverage the bounce back that's coming, and which we can see obviously that's happening, that's showing up in the numbers. But however, I think the one that is going to add on to it is the one that I've highlighted, which is casualization. So it's not coming at the compromise of women's. Let's put it that way.
Okay, thanks. That's it from my side. The best.
Thank you.
Thank you. The next question is from the line of Anand Shah from Axis Capital. Please go ahead.
Yeah, hi, Gunjan. Just a couple of questions from me. So firstly, on the distribution business, I mean, I'm assuming it accounts for about low double-digit revenues. So any plan you can outlay here as to how are you looking at it in terms of expansion and any targets in terms of contribution there?
Okay. So basically, the way we look at it, I'm assuming when you talk distribution, it's a multi-brand business, right?
Yes, correct.
The multi-brand outlets, I think, is a reality in the Indian market, and that is something that we can leverage. Also, with the formalization of the industry that is underway for some time, right? For various reasons, I think that's going to become a reasonably large pillar of our growth going forward. I would say currently the contribution would lie within the young or the lower teens, and I would see that contribution going into the 20s sooner rather than later, and therefore also powering growth for us. Yeah.
Got it. And second, on the expansion in general and as well on the franchise part, I mean, what kind of store expansion will you be looking for, let's say, in the next 3-5 years? And also on the franchise, you already at 270. I do see that the aspiration near term is about 500. So any timelines on achieving this 500 number?
Yeah, so I think we've set up a reasonably aggressive number in terms of 500 stores. I think that should also give us largely the incremental stores. We will have obviously some company-owned outlets, but I think the franchise model is going to be the go-to model from a disproportionate focus as well as investment perspective. So what we should see is hopefully sooner rather than later, but what I have set out along with the team is 2 to 3 year kind of a timeline.
Okay, thanks. I'll get back into the queue. Thanks.
Thank you. The next question is from the line of Bhargav Buddhadev from Kotak. Please go ahead.
Yeah, thank you for the opportunity. So my first question is that Bata hasn't been able to succeed a lot in the distribution business despite having a strong brand recall.
Mr. Buddhadev,
yeah?
Your voice is too low. If you can speak closer to the answer, please.
Yeah, am I audible now?
Yeah, much better.
Yeah. Yeah, so Mr. Gunjan, Bata hasn't been able to succeed a lot in the distribution business despite having a strong brand recall. Now that you've joined in and given your experience at Britannia, which has done a phenomenal job in terms of expanding business through distribution, are there any key learnings which can be implemented in sort of helping Bata succeed faster on the LBO side? That's my first question.
Okay. You want to ask your second question also so that I can answer in conjunction?
Yeah, so the second question is, you mentioned in your presentation that the organization will be doing a lot in terms of making it nimble on cost. So is it possible to elaborate on key areas which you have identified in order to make the organization leaner? Because if you look at the results of your competitors during the COVID period, Bata has been very low in terms of coming back to profitable path. If you look at other companies like Relaxo and Metro, they have achieved profitability much faster. So what are the key areas where we are looking at in order to make the organization more leaner? So these were my two questions.
Sure. Okay. So on the distribution side, I think there are learnings, right? It's a very different kind of a business, right? The ticket size is very, very different. And hence, therefore, basically the spread of the outlets or in terms of, consumers' expectations also, right? The intensity of work in terms of merchandise that you need to do. So there are various ways in which there is commonality, but there are several areas of departure also. So I would say that, there are areas where it can, obviously some of the learnings can be extrapolated, but a lot of that will have to be customized for this industry. But I'm sure I think we should be able to make a steady, solid push forward on this entire area, and which is what I had answered to the earlier question when I talked about in terms of contribution of the distribution business going forward, driven by obviously footprint, but also making sure that we've got customized merchandise for it. The consumer that footfalls into these stores is a very different kind of consumer. Her expectations are very different, etc. Right? So that's one. On the second piece, which was to do with the nimbleness on cost, I would say that there are initiatives and areas that have been outlined on this. I think it will take some time for us to show you progress as well as tangible metrics or movement of it. But I think one big area that we managed to make some progress was on the rental agreements that we do, right? Where we have tried to make an effort towards making sure that they are linked to revenues and therefore they become variabilized in some form. I'm sure that we will not be able to see, conversion completely into variabilization, but that is one big area and which was a big, millstone you can say around our neck if, the revenues tank. So that's one. But there are many others, right? And some of them are still work in progress, whether it be in terms of our front end as well as back end manpower productivity, etc. So there is work happening on that, and hopefully in the coming times I'll be able to share you areas a little more clearly going forward.
Sure, look forward to interacting with you in the future. Thank you.
Thank you.
Hi.
The next question is from the line of Nihal Jam from Edelweiss. Please go ahead.
Yes, thank you so much. Good afternoon, Gunjan and Vidya. A couple of questions from my side. First, specifically on the quarter and say over the last half, that could you give a sense of the recovery in your different key segments, that say formal, school, and open footwear, and I'll come to my next question after that.
So I would say that if let's say the overall recovery is at 85%. I would say formal and school for the quarter was, I think, indexed at roughly around 60 to 65%, right? Or maybe even lower actually for schools. But towards the end, I think we started seeing, it was a month-on-month kind of a trend, right? But for the overall quarter, it would be at the ballpark that I talked about. So 85 overall, was formal and school in the range of about 60%, plus or minus 5%. School being relatively lower because the schools opened only towards the end of September and October, then onwards.
Sure, and the open footwear and casual would obviously be much higher than what they were pre-COVID.
Absolutely. Which is why I had responded earlier that the contribution has gone up already.
This is helpful. The second question is that, as you mentioned, that one of the key drivers for your growth in the future is going to be the franchise-based store. Now, two related questions. One is if you could give a sense of, what could be the ballpark store economics for these franchisees. And secondly, as per your understanding, say in these tier 3 to 5 towns, what could be the average number of stores that you see in each of the, on an average in a city?
Okay. So basically, you're talking of store economics from the franchise partner perspective, or you're talking from a company perspective?
No, from a partner perspective.
From a partner perspective, basically we make sure that we are benchmark to the ROI expectation that are there, because there are obviously many other competing brands for franchisees, right? And in fact, there are a few of them who have done a much better job than us. So I would say that we are in the ballpark of the ROI benchmark that they carry, and we would like to stay within that, not too high but not too low, right? And that's okay by us because we are, it works fine for us. It's a far more asset light as well as it works in line with the, variability of, nimbleness on cost structures, etc., business model perspective. What was the second part of that question? Sorry. Number of towns and number of stores per town, right?
Yes.
See, it depends on various towns actually. Depending on the size of the town, I would say that anything that is below, and we are still, fine-tuning the entire model of what is the kind of, ability to assimilate Bata franchise, etc. In some towns where we are the first mover advantage, and there are many such towns as we expand going forward, right? My sense is that eventually we might be able to even have 2 or 3 such stores in that town. But in some other towns where we might not have had the first mover, we might be making an entry and therefore might be initially limited to 1. But ballpark, I would say towns that are more than 2 lakh population or 1.5 to 2 lakh population, I guess end state we can have at least 2 or 3 stores. The ones below that we would have, 1 store per town.
That's very helpful. Just one last thing. When you mention a ballpark ROI, I would assume that's in the industry between, say, adverse 15 to 20% for a franchise level. Would that be a fair assumption?
Yeah, ballpark, yes.
Sure. Thank you so much, Vinder. Look forward to further.
Thank you. The next question is from the line of Jignesh Kamani from GMO and Company. Please go ahead.
Hi. Just want to understand on the current state of supply chain and the plan to improve that. Giving a context, so 5-6 years ago, we tried to implement SAP, but because of the technical issue and testing issue, we tried to undo it and work with the old system. And if you compare with the global also, India is the most complex market in terms of the number of store and the SKU compared to other markets. So learning of the parent in the supply chain globally is also need to be improved. And we can't take benefit out of that in Indian market. So in that context, how is our current position and the future plan in supply chain?
You will have to repeat the question. I heard something about SAP 4-5 years back, and you talked about complexity. But what is the question exactly?
So I'm saying Bata has, you can say, running on the legacy supply chain system globally, both in India and you can say overseas market of the global. We tried to improve our supply chain system 6-7 years ago when we tried to migrate to SAP system, but there was a teething issue on the SAP, and hence we lost the revenue for few quarter, and then we decided to undo and go back to the earlier system of the supply chain part. So how is the current status of supply chain on currently, and how nimble or agile compared to competitors? And if you want to expand our store aggressively, the supply chain system will help that, or it might become an entry barrier issue on that.
So I'll request Vidya to answer that.
Right. So I think there are two parts to your question. One is on technology, and the second piece is on the scalability. As far as technology is concerned, we are addressing that, and we are in the, we are implementing. We've implemented WMS in the past, which has been implemented seamlessly across all the warehouses of the company, and we are also in the process of other technology interventions in the warehouses. So that is something that is in place and that is continuing on an ongoing basis. The other piece is on, the scalability of supply chain. I think in a retail organization, we've had a fairly robust supply chain infrastructure in place, but of course, in the last couple of years, there's been significant volatility with COVID. And obviously, post-lockdown, we've had to kind of ramp up our infrastructure to meet the increase in sales. So that is something that we'll continuously revisit. So as our sales, projections change and as our manufacturing requirements change, we are continuously looking to scale up our supply chain infrastructure. So I do not anticipate any issues from that perspective.
My second question on the aggression of the retail sales staff at the store level. How much percent of their revenue compensation is fixed in nature and variable nature, both for the store manager and the sales staff? And are we seeing the scope to improve the aggression and the tweaking their remuneration structures to drive the more revenue?
I would say yes, there is scope, but might not be only linked to remuneration. But right now, variable is about 25% of their compensation for frontline.
Understood. Thank you.
Thank you. The next question is from the line of Latika Chopra from JP Morgan. Please go ahead.
Yeah, hi. Thanks, Gunjan, for a good presentation. My first question was on, portfolio segmentation. If you could give some color here in terms of, price points and target audience, male, female, kids. How's the revenue salience and growth trends for these subsegments? And where do you see disproportionately, more opportunity for growth going ahead?
Hi, Latika. You have asked a very broad question, right? And I'm just trying to figure out what is the efficient way of answering this, right? See, it depends on the way you want to slice it, right? And, we slice the data in multiple cuts, right? One way is to do it by brand, right? So we've got brands, and then obviously, Bata Red Label, Bata Comfort, and you've got Power, North Star, etc., Bubblegum. So a bunch of brands which I just displayed on the slide. The second is by target consumer, as you said, which is men, women, kids, and so demographic kind of a thing. And third one that you also mentioned was by price point. And all three of them actually intersect in various ways, as you would most probably assume. So a little difficult for me to answer so easily. But I would say that from a growth perspective, I think from a structural strategic growth perspective, I would say that there are 3 or 4 pivots that I had actually talked about in my slide also. One is, I think, casualization, and within that, sneakerization is a large trend. It's a structural trend, and I think it's imperative that we participate successfully in that. So that's one. The second piece is, I think, the formalization of the economy, and therefore, I would say basically making sure that Bata and Bata's products are available within a proverbial arm's reach, and therefore footprint related stuff which will basically drive growth for us. And similarly, even on the other side, which is basically the digital piece, where again consumers are looking for hopefully our brand and making sure that we are attractively and proposition to consumers. So that's the second piece. I think the third one that's a little more nebulous right now, but hopefully we will see that developing. We've developed some work on it, right? But that's to do with future trends, which is to do with emerging requirements of consumers towards sustainability, and therefore presenting them a sustainable option, recyclable materials. We've got a a good shoe campaign that we've launched, which is a bunch of range that we have launched under Hush Puppies, which is made from recyclable materials, etc. So I think these are the broad pivots, I would say, rather than getting into slicing of data, as I said, which can get very complex, Latika.
All right. The second question was if you could give us, some sense, how the growth for your average selling price has been, on an aggregate portfolio basis over the last few years. And more importantly, how do you see this trending over the next 3 to 5 years when you plan out your growth trajectory? How should one think about, volume contribution and ASP contribution in this growth?
I would say that we would see a balanced movement, right? As I had mentioned in a question earlier, we are wanting to look at volumes backing up our growth. So it cannot be only price realization led. However, I think the pricing piece is a little more dynamic, and it depends on obviously material prices and cost related thereof, right? And which is something that we need to look at on a quarter to quarter basis. So I think broadly volume should back make sure that it's the foundation of our growth, right? The second piece is make sure that we are looking at margins at all points in time, whichever price point that we look at. And the third one is basically that premiumization story within each revenue line or a customer segment keeps continuing as a strategy for us. So those would be the guiding lights for us.
All right. Thanks, Gunjan, for this.
Thank you.
Thank you. The next question is from the line of Amnish Agarwal from PL India. Please go ahead. Amnish Agarwal, your line is in talk mode. Kindly go ahead with your question, please.
Hello, am I audible?
So if you can speak closer to the handset, please.
Yeah, okay. So, sir, my question is regarding the franchisee operations which we plan to expand. So what kind of investment will be required from Bata for expanding the franchisee operations?
So I'll not get into detailed financials. It's also it would not be advisable. But however, let me tell you, it's far more efficient from a capex perspective, from a Bata perspective.
But are there any financial commitments from our side, or is it more like you're just giving the brand and some sort of a setup support?
No. There's far more control and governance that goes behind it, right? So our objective at all points in time is to ensure that the consumer experience does not get differentiated. So we do make sure that even after kickoff and a start with a franchise partner, we want to make sure that one is a franchise partner is healthy and develops ROIs in line with what I discussed some time back, but also make sure that the consumer sees experience which is absolutely akin to what the person would see in a company-owned store, and therefore builds on the franchise of Bata rather than dilutes from it. So various mechanisms that are put in place, we make sure that they get replicated completely from a franchise perspective.
Okay, sir. My second question is with regards to slide number 5, where you have shown a pyramid of various brands which the company is having. So particularly in the mid segment and premium segment, which all are the brands for which Bata has taken licenses from other parties, and what sort of royalty or say any gross margin arrangement we have?
I can't declare numbers to you, but however, I think the brands that we do carry licenses are Hush Puppies, Naturalizer, and Shoal in this. And they are broadly accretive to our margins on a net basis.
Okay, sir. Thanks a lot.
Thank you. The next question is from the line of Ankit Kedia from PhillipCapital. Please go ahead.
So my first question is on the RM pressure we are witnessing, in the footwear industry. So can you just talk of the price increases we have taken in the system, and do the lower ASP products which are pushing in the wholesale channel have the similar gross margins which we have at the EBO level?
Yeah. So there are two different questions. On the RM piece, I think we are looking at the environment pretty dynamically, right? The environment on the RM piece is actually a little fluid right now, right? There are certain materials that we have seen very steep prices, right? But there are certain other large portfolio of our materials where we have not seen as much price, raw material price inflation. But on a blended basis, we are working towards mitigating that in the medium term, and making sure through multiple initiatives. Obviously, a key part of that is also pricing, but also in terms of cost initiatives, etc. Looking at material substitution, etc., etc. Right. So that's one piece. On the piece whether the distribution business, I think gross margin is the wrong metric to compare to, because there are cost elements that come from a EBO perspective which don't apply to a distribution business. But on a net margin basis, I think at an EBITDA level, they would be at par.
Sure. So my second question is on the athleisure. The global footwear giants, some of the sports brands, get around 20 to 30% revenues from athleisure. Is there any plans to launch athleisure for Bata? You have tried some in Power, experimented with that. From a 2 to 3 year perspective, where do you look at athleisure as a category, given the focus on sneakers as well?
No, interesting question. I think this is something that I would say that it's a structural priority. The reason that you don't see it in the bubble charts in a way that I have not expanded upon it is that we need to make sure that we get get the core right on priority, especially as we recover from this COVID times. But as we see progressively recovery happening, I think the athleisure piece is absolutely right, your comment, and you will see a lot more action and hopefully be talking about it also.
Thank you and all the best, sir.
Thank you.
Thank you. The next question is from the line of Vishal Chopra from UTI Mutual Fund. Please go ahead.
Yeah, hi. Good morning, and thanks for the call and thanks for taking my question. Firstly, just a clarification on slide 5. When you say 1,500 plus stores, are they inclusive of the 250 franchisee stores, or are they just the company-owned stores?
No, so these are all the exclusive stores of ours, which is what we have mentioned. So it includes company as well as franchise.
Okay, so we'll have close to 1,250 company-owned stores and 250 franchisee stores.
Roughly, yes.
Okay. Secondly, with reference to the question on earlier answer on earlier question you gave, just repeating it, but just to clarify, when I look at the three businesses, the company-owned retail business, the franchisee retail business, and the distribution or the MBO business, are you saying the net level EBITDA margins after all the costs, rent costs, and everything, full rent costs, everything, are the EBITDA level margins similar across the three?
Ballpark, yes. Franchise might be a little more.
Okay, and how about the distribution business EBITDA margins?
Which I commented, right? It's in the overall range of EBITDA at EBITDA level.
Okay, and okay, thanks for that. And last question, how do you think the proposed GST increase at footwear below certain MRP where the GST is lower now, which is proposed to get increased? How could it impact both the company as a Bata and if you have any comments for the industry as well?
Right. So I think we are currently awaiting the exact piece of the government notification in this regard. Having said that, we are making internal plans on what kind of things need to be done. So I think we will be able to share further detail once the notification is out and we know the exact structure of how how it's going to pan out.
Okay. But fair to assume that the industry will need to take pass on that to the consumer and take MRP increase? So
we will do whatever is required. We have developed scenarios and we are working with interim plans so that we don't get waylaid by it as and when the notification comes.
Okay, fine. Thanks a lot. Thank you.
Thank you. The next question is from the line of Sachin Bobade from Dolat Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. I request you to spend some time on the Step Ahead campaign. So last time when we launched this red campaign, that time the results were very good, very impressive, and that time we also got associated with Kriti Sanon. So this time, any new associations we are planning to do? Any price points where you think you can launch the products, and something how aggressive you think that we can do this campaign? Last time, I think the women portfolio contribution has increased significantly. So your comments on Step Ahead campaign, number one, and second, the best margins we were able to achieve in the time of FY19-20 when premiumization was at peak, and then after the COVID came. But then this time, because of COVID, last 1.5 year, we have lost some volumes. So the focus would continue to remain on premiumization, or that will take some backseat, and volume regaining the volumes would be a priority for the company. Your comments, please.
Okay. So on the Step Ahead campaign, I think this is just a start, right? We have been such an absent for a reasonably extended period of time. We had small spurts, but then we had to abort them again because of subsequent successive lockdowns, etc., and uncertainty. So I think this Step Ahead campaign was a start towards, as I had mentioned, bringing back the marketing muscle into Bata. And we will see a lot more going ahead. In what form and shape, I think you'll have to wait and watch, right? But it will be obviously in line with the imperative that I've just talked about. And, it will try and, obviously further the kind of areas where we see strategic, benefits in terms of positioning our brands right. Right, and they can be, niche for certain brands and consumer segments, as well as mass advertising or campaigns for certain brands and segments. Right, so that's on that front. On the piece that you talked about in terms of margins versus volumes, I had already mentioned that we don't see them as exclusive. We will want to see premiumization as a journey continue. But however, there is a volume that is an opportunity which is basically in terms of bottom of the pyramid, the formalization of the economy, the bottom pop strata and tier 3, tier 5 towns, which will be fueled by the initiatives that I've already talked about. So I don't see them as exclusive to each other. They can go potentially hand in hand. And we have seen it in the quarter. Our volume recovery has been faster despite the ASPs and margins getting maintained at a gross margin level.
Okay, sir. Thank you. Thanks a lot, sir.
Thank you. The next question is from the line of Girish Pai from Nirmal Bang. Please go ahead.
Yeah, thank you for the opportunity. Gunjan, I had a few questions on the wholesale channel. How do you think, besides distribution expansion, how do you think you're going to incentivize distributors who typically tend to be multi-brand distributors to sell your products? Is there anything that you plan doing there? And secondly, I recall you saying that there's going to be a separate brand push for the MBO side. I recall you mentioning this in one of the interviews that you did. So does it mean a separate brand ambassador on the MBO side?
Sorry, I missed your first question. What was that?
So besides the distribution expansion that you're talking about, what else are you planning on the wholesale side, be it from an incentivization of distributors? What other steps do you propose to take on the wholesale side to grow that particular part of the business?
Mm-hmm. Okay, all right. I would say that basically there are multiple elements that go into running a distribution business, and I think there are, while we have not detailed out everything, but work that is on in terms of the kind of merchandise. I had already mentioned that the merchandise required for that consumer segment, etc., is very different. So there is already a lot of groundwork that's happened on that, and we are seeing early signs and fruit. The second piece of making sure that we have also not only distribution but also in terms of engaging with these multi-brand outlets, that requires a very engagement model compared to exclusive outlets, and therefore how do we make sure that Bata is prominently shown to consumers both in terms of range as well as brand recall, etc., is another big part. And then there are engagement programs, incentive structures, etc., right? So all of that basically goes into the package of running a distribution business. From the point that of brand ambassador, I don't think we have reached that stage. We are looking at seeing whether there can be flanker brands in the distribution business, but I think there's some way to go before we can start talking at it. So we will leverage the overall brand equity that will anyway get reinforced with various other marketing initiatives of ours.
Okay, if I can squeeze one last question in, what is the universe of multi-brand outlet touch points that you see in the country today, and where do you think we are right now?
I think the data is a little hazy. It's not easily available, but my sense is that it's at about 100,000 outlets, right? I mean, anywhere between 80,000 to 100,000 outlets, depending on the source. And I would say that we are somewhere in the range of about 30% or 35% of that. So that's the scope.
Okay, thank you very much.
Thank you. The next question is from the line of Richard D'Souza from SBI Mutual Fund. Please go ahead.
Thank you, sir.
Your line is talk mode.
Yeah. Thank you, sir, for giving me the opportunity. I just had one question. So we look at the DNA of Bata over past few years or past decades. It is something different from what you're talking about today. So just wanted to understand that how you are planning to go about this transition.
You will need to elaborate on what you perceive as the DNA over the last decade.
Well, if you speak to consumers, if you speak to company people, or if you speak to even your competitors or other suppliers and all that, they say that Bata is basically a bureaucratic organization. It's like working with a government company. And what you're talking now is that you want to make it responsive, nimble, and respond to the market forces. So just wanted to understand, sir, while what is going to be attempted is very commendable, but how do you plan to go about it?
See, the way to answer something like this is that, I would love to talk to you as, the quarter and the years go by in terms of how you hear about it. But it's a longer term journey, I would say, right? So I'll just give you one element of that. I think if you look at over, let's say, 10 years, etc., in fact, one of your counterparts did show it to me at some point in time, right? The marketing investments prior to COVID being a disruptive period, but I'm saying even the 2-3 years prior to that, had seen a significant jump shift even in the P&L reporting, right? And that's visible to all of you all. And that automatically translated into a certain set of outcome metrics, right? While you can see the premiumization, ASP, etc., related stuff and also margins. But what we also saw, right, was that the consumers who were footfalling into our stores was becoming younger, even at that time. So let's say, a survey that we had, we do continuously with our consumers, let's say in 2019. So that had started showing a trend towards consumers becoming younger, right? So I think it's a continuous journey, and I wouldn't say it's a sudden start. So hopefully we'll love to hear your feedback and look forward to it being positive.
Okay. Thanks for that. And just another question from me. You had spoken a little bit on the athleisure part. So how big is a focus area for you, that particular angle?
No, so I will put it this way: non-footwear, right, is about high single digits, about 8-9% of our turnover, right? As I said, right now the primary focus is to make sure that our core gets right. But eventually we do see a lot of potential in that area. There's work already happening. So I would say I think we wait and watch, and you will see hopefully our actions on that front. But strategically, I do see a lot of potential going forward in that area.
Okay. Thank you, Gunjan sir, and wish you all the best.
Thank you.
Thank you. Ladies and gentlemen, due to time constraint, we take one last question from the line of Ashit Desai from Emkay Global Financial Services. Please go ahead.
Yeah, hi. Thanks for the opportunity. Could you share what is the percentage of stores and revenue for us coming from top 10 towns and the other smaller markets? And secondly, going forward, could you also share the exact number of stores and the towns that we are present in, like many other retail companies do?
Okay. So basically, I would say the first question, it would be in the range of about, I would say 30%, right, is what our contribution would be, about 30 to 33%, right, is what the top 10 metros would be contributing to our turnover, right. In terms of basically, just repeat the second question, please.
Yeah, on the store count and number of town presence, requesting if you could share the exact number of stores and towns like many other retail companies do.
Yeah, right. So I think we would broadly be present in about 400 to 500 towns, I would say right now. About 500 towns with our exclusive stores.
Your presentation says 950 plus towns.
That includes the multi-brand outlets.
Okay.
Yeah. I was assuming you're talking of stores, which is exclusive stores. Otherwise, it stands close to about 1,000 towns, as I mentioned in the presentation. Yeah.
Yeah. Thanks, sir.
Okay. All right. Thank you.
Thank you. Ladies and gentlemen, I now hand the conference over to the management for their closing comments. Over to you, sir.
Thank you so much for joining. Right. Look forward to interacting with you in the coming period. And thank you for your interest. And in case there are any further queries, you can please direct it to our investor cell, and we'll be happy to entertain. Thank you.
Thank you. Ladies and gentlemen, on behalf of Axis Capital Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.